Good evening, everybody, and thank you very much for joining us. There will be people that come in and come out, so that's fine, but we'll get a start now. It is 5:30, so welcome all, and thank you again. This is a positive and sensible step to you taking control of some of the issues we're going to be talking about today. Structural sound teams in the age of COVID. We've just been through a torrid time, once in a century happening events, and it's just been a terrible time for a lot of people, but for others it's been a great opportunity to see what they can do with their business. So the change is coming, and are we ready? Today we'll talk about the JobKeeper and some human resources essentials for your business. Okay, we'll go to the next slide now. We'll introduce ourselves. So welcome, my name's Jared Andrews. I'm a Chartered Accountant at AdviceCo and got over, wow, 30 years. That's a little bit scary. So with me today, I've got Grant Robertson, a young gun, future leader. I'm not like that one. So welcome, Grant.
Like that. Thank you, Jared.
That's good. I've actually coached Grant in some football way back when he was 8 years of age, so around about 12 years ago. So how it all comes around. So really honoured to be sharing this occasion with Grant and seen him progress in his career. So yeah,
thanks,
very, very honoured.
Thank you.
All right, let's get stuck into this because you are here to get some tips, and we're here to make a difference for you. So we are AdviceCo, one of Central Coast's leading accounting and financial planning firms. We've been around since 1988 and established a great team of 28 professionals, and they're a good pleasure to work with. They're so professional in what they do, and it just makes it a happy place to come to every single day. So we provide quality accounting, tax and wealth advice to business owners and their families in order to protect their wealth. And we exist to help our clients be better off. It's as simple as that. It's a way that it's meaningful to them, and it's what we're passionate about. So we want you to come to us, and even tonight, and be better off with the experience and knowledge that you're gaining. So AdviceCo, we have a central office here in Gosford. This is our main headquarters, but we also have some satellite offices in Wyong and Sydney. All right, what brings us here? Oh, the Band-Aids are good. Icon up there, isn't it? Corona crisis. It's had a huge impact on our clients and obviously everyone else in the community. And how do we navigate through the JobKeeper 2.0 is just around the corner, a matter of 2 weeks away. And we need to ensure that we've got the HR essentials to structure our teams for business sustainability. So let's get stuck into what has happened with the business environment in the past, 6 months now. So more than a third, 35% of businesses will face challenging paying bills. Yes, we have seen that at a client level. And 28% of businesses expect a decrease in revenue over the next month. So that's also impacting on a lot of families as a direct result of COVID. 28% of those businesses decreased staff in the week ending 3rd of April. So straight away, 28%, that's a huge number of the Australian workforce. And now our unemployment rate is 7.5%. So it could have been a lot worse than that. I believe the JobKeeper was a great initiative by the government, and it saved around 1 million jobs. Don't you agree?
Yeah, definitely.
So it's been a massive change for a lot of businesses, and we'll go on to the next slide now because we're going to let's quickly have a look at this one. Look at that spike. Wow. Increase in job search. And obviously with what's going on and the job queues that you see on the television, that's quite a huge spike. So alarming for a lot, but we should be back into full production fairly soon. We've got a lot of businesses that had forced shut down that are now back. So they're up and away, and now we've had that extension for the application for JobKeeper 2.0, which is going to be on the top of everyone's lips on about how we get it, how do we qualify, and what does it mean for my business moving forward. All right, so we'll go on to the next, now the changes. Oh, well, we're just around the corner. It's going to be the 28th very, very soon, and we're going to see a big change in the JobKeeper. Thankfully, it's remaining for a lot of businesses who do need it, but we need to be aware as business owners, how do we qualify and what are the changes that are just around the corner? So the payment rate will be reduced. Currently it's $1,500 per fortnight. It will reduce to $1,200 per fortnight for the majority of businesses, which do employ people for more than 20 hours per week. So if you get less than 20 hours a week, you will be reduced to $750 per fortnight. So that's a major change where it all was $1,500 for everyone, regardless of the amount of hours they work. Now there's a new criteria of 20 hours. So that'll have a significant effect on businesses moving forward, and a lot of work for us to keep applying for this, which is okay because this has been a huge difference in the life of businesses. There would have been so many that went down the gurgler, and thankfully this has been a great announcement, and it's going to continue. So the date of employee commenced, previously it was the 12th of March, whereas now the new date changed to 1st of July. So any new employees that came on will now be eligible to be claimed in the JobKeeper. If you're still remaining and you satisfy the criteria, nothing needs to change from your end. You'll continue just applying. All your employees that were on the original application remain so, but if there's been changes, you need to notify the ATO. So we can do all that for you. So that's no problems if you need further assistance or further clarification on that. And just a little bit of housekeeping as we're on the run here. You can submit your questions on the fly. We're ready to go with those questions. We'll receive them and we'll try and answer those in real time for you. So don't hesitate to drop a quick question in regards to anything that we both mentioned tonight. All right, now the criteria is the big one to get over, isn't it, Grant? This criteria is a little bit different to what it was before, and this is the real clincher as to whether you or not get continued JobKeeper. Previously, we just had 1 month test and you can choose between accruals or cash basis. Now the game has changed, and you can see why. I can see what the ATO are trying to get onto this, and they're trying to get onto it from the point of view that they can measure this a hell of a lot easier than what it was before. Now the new requirements is that it's going to be based on your GST reporting method, and it's going to be based on a quarterly basis. So we've got to assess, or your business needs to assess, whether your turnover has reduced by 30% if you're a business, or 15% if you're a charity. We've got some charity people here that have logged in, so you need to ensure that it's 15% reduction in turnover for charities or 30% for businesses. Now the turnover for this is the big test, isn't it? Grant, it goes way back to this same period in July last year. So 1st of July 2019 to the 30th of September 2019 is the testing period, and that's based on your reporting.
And we've just got a question come through from Guy. If you previously didn't qualify for JobKeeper, would you qualify now? So the answer to that is basically yes.
Yes, yep, it's a new criteria. So if you have had that reduction, and the test simply is from the 1st of July right through to the 30th of September 2020, the period that we're in right now, it's about to end in 2 weeks' time. That is if it's reduced by 30% or more than this same period last year, you're in. You can continue with...
And that would be the same for the December quarter as well, wouldn't it?
Yeah, so for the December quarter, that's a new test. So to continue post-December, you'll need to reassess and go 1st of October to the 31st of December. If that's a 30% reduction in the same period for 2019, then you'll continue for January, February and March. And that's all supposedly to cease at that point in time. So the GST, I just want to touch on that, the GST reporting method before we move on, and that's the critical factor here. If you are registered under the cash basis, that's what you look at in your G1 figure. Take out the GST, of course, and your 2019 figures from the 1st of July right through to 30th of September, and if you're monthly, you add up those 3 months, and if that turnover multiplied by a 30% reduction, that's your test figure. If you get under that for this period that we're currently in, you're away. You satisfy the criteria. So it's very much different to what it was before. What we had before was a little bit of flexibility there and a choice of method. This time it's whatever you report. So if you're on accruals for BAS, you look at the accruals. If you're on the cash, you look at cash. So it's as simple as that. And no doubt it's a way for the ATO to measure your entitlement immediately.
So it's also going to be important for everyone to make sure their books are up to date. So when this actually happens, you'll need to start paying JobKeeper if you're eligible from that next week. So to deem you're eligible, you need to make sure your books are up to date, nice and early, and then we can lodge the BAS and see whether you're eligible. Yeah,
good point there, Grant, because obviously those businesses with electronic software, are in a better position to ascertain whether they're eligible or ineligible and can continue with JobKeeper or not, or exit out of the system. So it will be a game changer for a lot of businesses, particularly those that are registered under the cash basis who previously got JobKeeper under accruals. Now that it's just an assessment of pure cash that comes into them. But there might be a little bit of flexibility for those registered under the accruals method for GST reporting. So major change for that one. So hopefully you can continue, but if not, be careful of those rules because they can be measured a lot easier by the ATO. It's just around the corner, 2 weeks away, so we need to ensure that where we're going to land ensures that you continue with JobKeeper or not. So it's important that, yes, as Grant indicated, that we ensure that our bookkeeping is right up to date and accurate.
Cool.
Okay, some of these changes in regards to JobKeeper, if we can go into the next slide, explain up a little bit. Oh, yeah, we're going a bit too far. Here we go.
There we go.
So what we need to assess, hopefully that answers all your questions in regard to this new JobKeeper 2.0. What you need to ask yourself is what changes do I need to make to my organisational structure in order to maintain and grow my business capacity and sustainability? And how does a reduction in staff influence my ability to grow my business now and later? We've developed a cost efficiency spreadsheet, which Grant's going to run you through. It's so essential to look at and alarming to look at from the point of view of how much this is going to cost your business if we don't do anything about human resources. I'll let Grant now go through this, and it's a great spreadsheet to let you know what's going on.
So I'll take a couple of minutes to explain it. So basically this is where we've mapped out the business on one page here to simply see or track where our inefficiencies in the business can go and what that can cost you at the end of the year. So we've got 3 main headings up here. We've got time management, cost management, and quality management. So we're going to start here by what is 1 hour of my time worth. So we've just put in here $100 an hour. Typically, if you're the business owner, this might be what 1 hour of you being productive will earn you in revenue. And then, so what we're going to do is see where that time can go and how wasteful it can be. So with time management, we've got waiting around for others. So if you're a landscaper or something, you're waiting for another contractor to come in, you might end up every week, you might spend 2 hours waiting for people. So it's a massive inefficiency, and there's $200 straight away each week that you're pretty much nearly sending down the drain if it hasn't been if you're waiting around. Yeah. Poor delegating. So if you're not delegating work correctly or to the right people, people that might be slower, or they might not be able to understand the way you've delegated it, that can always be something that, again, sends money straight down the drain pretty much. So it's poor delegating. Let's just say an hour each week, you might send it to the wrong place. Abuse of out of hours time or overtime. So you look at this as when you might be paying staff that are doing overtime. What are they actually doing? Are they doing things that are actually valuable to the business and productive? So they might be spending 3 or 4 extra hours a week. You might be paying them for that, but is it productive and is it actually worth anything, or will it generate any revenue for the business? So we could even say nearly 3 hours a week you'd expect an hour Monday, Tuesday, Wednesday. Yeah. That's how simple it is to add up. Creating documents from scratch with no templates. This is more based on bookkeeping sort of area. People might not have their payroll set up electronically, so they can just template, punch in the numbers straight away. You might spend an hour to 2 hours every week really not efficiently completing that. So we'll add an hour in just to say there. So we go down to cost management. So this can be a little bit different per each industry. So there's multiple options. You could change all of these to show different cost management issues, I guess you could say, within the business. So not recording actual work time. So you might be using estimates, or you're not including your travel time between jobs, or the in-between time that you expect there was going to be. So we could say you might spend half an hour each day driving between jobs. So there's 2.5 hours there of waste. Allowing too much waste of products and services. So might be ordering too much materials or spending too much time on something that doesn't require it. So straight up, could even say 3 lots of 100 a week. So you might, an extra $300 a week will eventually add up over the year. So then we'll go into quality management. So not checking your work quality at critical stages. So this can become costly. So you might be ending up having to backtrack on your work. You might be having to redo things throughout the year. So when we go not checking work quality, critical stages. So by not spending that extra hour with someone, it could really cost you an extra 2 in the long run to rectify that mistake. So we'll add that in there. Providing insufficient training or guidance. So if you've got lots of staff or newer staff, you might not be displaying the right training for them, or they might not be guided the right way, might not be shown what to do. It might not be as clear to see as some of the others, but if you look at it with some younger stuff, if you don't spend that early time straight away, you won't be able to get the reward at the back end. So we could even say an hour every week, or actually we'll say 2 hours, because really 2 hours every week, if they're not working efficiently, that can become quite a large number.
Yep.
So what I'm going to do now is I'm going to calculate this based on what we've seen, so hours per week from the time management, cost management and quality management. And you'll be shocked to see this number here that will come up at cost inefficiencies for the year, which is $85,800.
Wow. So there you can see that's a good wage for a typical employee or a manager, and that's how much this could possibly cost you. So, wow, that's very aligning and scary at the same time to say that we don't do anything about it. We inadvertently are costing us $85,000 on average per year. So this is massive, and there are ways to eliminate that or reduce it significantly, which is what we'll talk about leading on to the further strategies that we'll talk about right now. So in regards to all of that, if we can go on to the next one, we're going to talk about ways of reducing that for you and where you sit and where you have been sitting in regards to the COVID-19 and what grounds do you sit on and what are you legally entitled to do and not, and how to reduce tribunal hearings and all these nasty things that you do not want to get anywhere near of. So the first one we're going to talk about is termination. Is it a termination or redundancy? Often employers and employees are confused as to what has happened, particularly with COVID. Am I being terminated or being stood down? Am I actually, positions being made redundant? So if it's a termination, have I complied with Fair Work Act? And you need to ensure that all your policies and procedures are in place to ensure that you don't go down the grounds of unfair dismissal. One way to eliminate that is to have employment contracts or employment agreements so that both you as an employer and employee know your rights before even going anywhere near a tribunal. So is there ground of termination? Is it unlawful? Is it lawful? So that's where your agreement with your employee would clearly stipulate that and articulate that in plain language. And really it gets down to, does my paperwork hold up? Because if you are, well, as we've seen now, the court cases will justify this. There has been an increase in unfair dismissal claims from employees taken against their workplaces. So be very mindful that just because we're in COVID doesn't mean that you can automatically just dismiss an employee because there's lack of work. There needs to be a bigger process to take place to ensure that your dismissal is not unfair. So critical in those environments, isn't it, Grant? We've had a lot of clients get into these territory, particularly in forced shutdowns. So we'll just talk about some of those issues as examples and illustrations.
And the best way to avoid that is by simply, again, having employee contracts, isn't it, Jared?
Yep, it certainly is. Got to have that paperwork because it protects you as a business owner. You do not want to go anywhere near tribunals, and it's just there for your protection against a lot more other things other than just looking at unfair dismissal. It's going to protect your copyright, the business itself, workplace taking work elsewhere, all those sorts of issues where you can say, no, this work here belongs to us. If you don't have that documented, you haven't got a leg to stand on. It's so important that we have that documented for all employees. It doesn't matter if they're a cleaner or if they're a high executive. You need to have workplace agreements for all employees of your business in order just to protect you, not just for unfair dismissal claims, but overall protection of your business itself. So redundancy is caused by economic conditions, provide business inefficiencies, or a technology development might outdo your position as made redundant. So termination of employment due to redundancies occur where an employer has made a definite decision that the employer no longer wishes the job the employee has been doing to be done by anyone, and that decision leads to the termination of the employee's employment. So very, very important that you don't try and hang your hat purely on a redundancy of a position when in 2-3 weeks' time that position is re-advertised. That is just opening up yourself for legal action. So be very, very careful you're not using that redundancy hat to hang your termination issues onto, because it will not stack in a court of law. So be very mindful. The same rules apply during employee stand down as well. They cannot be dismissed just because they've been stood down. You may have had a business that has been stood down, such as a cafe, that's fine, but it's not grounds for dismissal of an employee. So be very, very careful about those issues. There are other ways around that, and your employment agreement will clearly indicate that. So that's why it's so important to have those employment agreements in place to ensure that both the employer and the employee know their rights. So we can look after all those employment agreements for you. If you don't have them for businesses, we have the capacity to have those drafted for you that's in full compliance with the Fair Work Australia Act and full compliance with normal policies and procedures to protect you and also to give rights to the employee, which is also important. We want to be a good employer, do the right thing by the employee at the same time to ensure that they're better off. Employment contracts, that leads us into further contracts. It's so important that we get this right, because if you don't, it's just, we're going to be in tribunal or have disputes that end up being just to and fro and just waste time, and time is money. So do you have an up-to-date, legally compliant employment contract in place for every employee? If not, start to take action now and ensure that you do. Without something in writing, disputes can arise over the terms and conditions of employment. Equally, contracts protect employees, so it's just as much protective for them as what it is for you as a business owner. And contracts should be drawn up for full-time, part-time, casual and contract staff. I just want to quickly go over the latest court ruling, which got a lot of paper time and airtime in the media, about casuals winning a case in the full federal court in regards to employee entitlements attributable to casual workers, which stood up and said, wow, there's lots of people who work in cafes and gyms, etc., that have been stood down. Well, they're actually now entitled to employment entitlements, and those employee entitlements will be annual leave, sick leave, all those sorts of things. So we generally pay casual workers an inflated rate to compensate for their loss of these employment entitlements. But that court case said that no, they, in addition, receive those. But I say with a caveat in regards to, but this was a particular case that was involving a employee of a mining sector. So it had repetitive shifts that he was consistently on for the last 2 or 3 years, and they were repetitive in nature as to the amount of work that he was doing. So on that basis, you can understand why the courts actually said, well, he's virtually either a full-time or very, very part-time-ish, but it was so repetitive that it wasn't casual in nature. So don't be alarmed about that court decision. The same policies and procedures and protection from the Workplace Australia Act are in for casual. So if they're just casual working 2 days on a Sunday, they still get those inflated rates, or sometimes it's up to 30% the general rate over and above, but they don't then automatically fall into additional time off such as sick leave and annual leave just because they worker to hour. This court case was involved of a very repetitive nature, and that's the confusion that has been caused in the marketplace at the moment, is that all casuals now get these benefits, but that's not the case. This was a very specific case, and you can understand the judgment handed down by the judges in this one.
And that's why it's very important to make sure you know what industry you're in and make sure the contracts and you're paying your employees in line with those industries and those standards.
Yeah, so very important. I just want to, before we get on further, I just want to go over, if you are looking at terminating or having a discussion with an employee about their future prospects because of the downturn that you have suffered in relation to a business, it's got to be a stepped process of communication, in that you've got to look at informing the employee, preferably in person, and always supported by written shared notes. Because if you don't get this communication, it comes up at tribunal as to why an opportunity for the employee wasn't granted to come back with you with questions and clarifications and or options, and negotiate and settled on any details that have been discussed. So if you don't give that opportunity and it hasn't been documented and it hasn't been clearly articulated, you just open yourself up again going down that road of tribunal hearings where, yeah, nasty work, and largely they land on side of the employee in situations like that. So please ensure that you communicate if you're going down that road of forced shutdowns or workers dropped off. You've got to communicate, and that is in your agreements that you're going to get drafted up. If you don't have them, you're going to take some action and get those done, and you're going to come to us because we prepare them, and you're going to be better off as a result. So please be very mindful that you need to communicate upfront with your employees. You just can't turn around and say, it's Friday, and then Monday, sorry, we haven't got a position for you anymore. There's got to be better communication than that. All right, thanks, Grant. We'll keep going now with policies. That's also built in with human resources, and written policies are a secure way to ensure employers and employees are on the same page when it comes to conduct and entitlements. So policies reduce the confusion, potential argument over topics such as expenses, workplace flexibility, working from home, particularly in COVID. People have been asked to work from home, incentives and bonuses, leave, code of conduct, performance, KPIs, absenteeism, leave and attendance. It's a good idea to update your policies if they're not already with any temporary COVID conditions, to inform your staff of the update and to give them a right of reply. There's no better time to do it than now.
That's right, and it's important that they actually read and understand it, your employees. It's okay to just give it to them, but as long as if they don't understand or have any questions, they need to be answered and resolved now before the problem comes up down the track.
Yeah, and this is all just best practice for your business. The more policies and procedures you have in place, the more control you have over your business, and this is just another area that's so important, but it's just highlighted the fact that it's ever so important in COVID conditions. So and some of those might be in regards to redundancies and layoff periods, is redundancy notice period. As simple as that. You've got to have an understanding in your agreements that there is a certain amount of time. If you're a long-term employee, you get more of your redundancy, length of service, length of notice, all those sorts of things. So it's important that the employees are aware, and also you as an employer are aware of certain conditions that are in law and also certain conditions within your company practice. So all so important. All right, we'll keep those questions firing in. In regards to the subsidy for trainees and apprentices, this was muted to be axed, but now it's back in. So if you do have an apprentice and you're less than 20 employee business, and you will receive up to 50% of their wages, which is quite significant. It has been in play for the last 9 months because they were effective from January onwards. And employers can apply for that subsidy through the Eligible Australia Apprenticeship Support Network provider. So who you discuss as your training provider, you all have training providers, you go through them and they will apply for you on your behalf and get those through. So those that are currently in the system, nothing else for you to do, it will just continue for you. So ensure that if you're not aware of that one, this is a really good one because we all have apprentices, so lots of trades out there that employ apprentices and need to be aware of this one because this is just money for jam.
Yeah, yeah.
So ensure that all your reminder that the national minimum wage has increased in July to $19.84 per hour. This has caught a lot of businesses out.
Yeah,
particularly.
we've had to go back and for a lot of employers go back and amend the last couple of months. So it's important that you keep up to date with this and stay aware of where your employees are at.
So it's interesting just having a look at that one, Grant, because it's now 740, but I noticed the JobKeeper, if you're entitled for those businesses, is 750.
Yeah, up from 753, yes.
Yeah, so it ends up better if you're on JobKeeper than what it is on the minimum wage. So that's an interesting one, but please be mindful of that one because that's very important that the claims will continue right through to the 31st of March. So get on board with that one if you're not already. Yeah. All right. So in these times, superannuation has reared its head to say, do I pay superannuation support on JobKeeper payments? Well, simple answer to that one is no if they're not working, but yes if they are working. So it's important that, and this gets behind ordinary time earnings, so we've bracketised that into OTE, ordinary time earnings. So if your employee has been working in COVID times and they've been getting JobKeeper, you've been paying them $1,500 and they've been working all that time or up to $1,500 worth of hours, they are entitled to employer support for superannuation. So that's 9.5% of ordinary time earnings. If they haven't, they've been stood down or they've been told that we don't have a workplace to come to and they're still getting paid the JobKeeper, which is $1,500 right this very time, they don't get employer support because they're simply not working for it. So that's the big key to this one, isn't it?
So we'll take a quick quiz on this. Yeah, so a couple to go. So annual leave loading.
Yeah, so annual leave loading, do you think that applies for superannuation support? Well, no, because it's actually not worked. It's just paid for that 17.5% it used to be, still is. So the 17.5% that's paid over and above your annual leave is not subject to employer support because it doesn't represent ordinary time earnings.
Okay, so we can say the same for overtime?
Overtime is no, yeah, it's not subject to employer support because it doesn't represent ordinary time. You're not in ordinary time conditions, so no to that support.
Redundancy payments?
Again, this is a no, but sometimes be careful because if you actually put in for redundancy and you're actually saying that you'll be working, but then say, well, the employer then turns around and says, oh, well, I don't need you to work for this 2 weeks notice period. You still get employer support because you've made yourself available to work for that 2 weeks, so you're entitled to that. But anything that extends out further than that, or you've been agreed to terms that you'll finish up today, for example, there's no employer support required for redundancy payments.
Okay, and directors' fees?
Directors' fees, no, because they're generally not worked for. So again, they're not in ordinary time earnings territory. So that's not, but clearly if they are working for those directors' fees, so they're attending board meetings and it's agreed that they get paid a rate, generally, as we've seen with employment agreements, and get those for directors as well, because if they do attend board meetings and they're expected to get paid, well, have that discussion early on as to whether that represents ordinary time earnings, because generally yes, but if it's just directors' fees for merely just being a director, no, because you haven't worked for it.
Okay, and government wage subsidies, which we just spoke about?
Yeah, the government wage subsidies, so they're received to you to help employ people on apprentices and traineeships. So they are entitled to employer support because they're actually worked. So again, we're getting back to the ordinary times territory. Are they worked? Yes. Okay, you get employer support. You just receive a subsidy from the government to continue or give you support to employ. So if those people that you're receiving for are actually employed, so it lends itself that they receive employer support as well.
And one last one, which will lead us into our next slide, which will be on everyone's minds with COVID at the moment, sick leave. Does that carry superannuation on it?
Sick leave does, yes, because it would have been worked. It's just that you couldn't attend work. So in these COVID times, if you've taken your sick leave because you've been told to stay at home, where you've rung in a little bit sick or had a sore throat, and the employer's gone, we should get tested, and you've got to wait for those testing periods, and therefore you take some sick leave for that time. Do you get employer support for that for superannuation? Yes, because ordinarily you would have worked for that time. So that's the distinction there. So it's very important during all those, and this is why we brought it up here, is to get your accounting payroll systems ready to capture all those. So if you're on the Xero or you're on Mild or QuickBooks, they do have the functionality within there to get the payroll set up so that those types of instances that we've just highlighted are captured correctly in your software. So it just happens automatically. You don't need to give it a second thought, and the correct information goes through.
And they'll calculate leave and everything for you, so make it a lot easier.
Yep.
Definitely.
Yep, so that's the benefits of electronic software. All right, so this is going really well. So leave, temporary changes have been made to some annual leave entitlements because of the impact of coronavirus. So annual leave at half pay in some awards is still very much in play, and that's coming to the fore that we see right at this moment. So you do have that entitlements, but again, it's subject to your agreement or subject to your award. So if you're unsure what the award is, or if you're unsure what your agreement says, go back to it. If you don't have one, that's a good reminder to get one, and look at what that procedure is. So if it's clause 7.8, for example, well, what are the entitlements if I do say to the employee, can't come in today because we've been forced to shut down? Or what are the rights for the employee, and what are the obligations for the employer? So one of those is annual leave at half pay. So that's one of the stand down adjustments in the Fair Work policies that are out there at the moment. So they're ensuring that annual leave entitlements are a way for employees to receive something. Accumulating your annual leave when stood down or on unpaid leave, and that's important. You can take time off as unpaid as well, so that you're not eroding your accumulated annual leave, or as an employee you can often say, can I take up my annual leave as payments because I need to live, I need to pay expenses, they're still coming in, mortgage repayments are for some now coming back into play now that they've been deferred, and that deferred period has now lapsed. So we can opt to take accumulated annual leave as additional payments, so that's also important, and the unpaid sick leave for COVID-19 diagnosis or self-isolation. So if you've been told to self-isolate in some periods up to 14 days, for a lot of time you're probably going to use up all your paid sick leave, particularly for newer employees, but those who have entitlements, and that's why it's so important to ensure that you do have software and or other recording methods to track and monitor and control the amount of entitlements for sick leave around employees, because it can add up over the years, and it is accumulative. You don't get it paid out necessarily when you leave and all those sorts of things, because it's only paid out when in fact you're sick. But for a lot, it's accumulating, has been accumulating for a number of years, and this is where the self-isolation will then have you to go back to those records and ensure your accounting is up to date and correct, because otherwise we're going down the road of saying, well, I thought I had 90 days worth of being there for you for the last 10 years. Well, surely I've got this amount of time that I can get paid. So you need to be aware of that because yes, sick leave is accumulative, and we need our systems up to date in order to correctly pay our employees and do the right thing.
So we've got a question here from Beck. We'll get to the JobKeeper ones again in a moment, just to do with leave. This one, if an employee's on unpaid leave, for instance, they have used up all their sick leave, do you just unenroll them from JobKeeper for that time?
Well, they need to receive, in order to get JobKeeper, they need to receive that currently, $1,500 per fortnight. So you need to ensure that if they do fall off the radar, that yes, they do fall off the radar for JobKeeper, because they simply aren't getting that $1,500 per fortnight, because that was made clear from the government that it must be $1,500. If you're not paid that, you're not entitled to JobKeeper. So yes, there will be entitlement or obligation on the employer to get in contact with the ATO to say, please, and that if you're doing it electronically or through a tax agent, you can get on your own business portal and actually remove that employee from your maintain employees list. to ensure that that one's not entitled to JobKeeper for this particular month. And they break it down into fortnights on the ATO side.
Okay. Right, so we'll go through the next.
Well, that will bring us to the conclusion of this. So the main points to get out of this are the JobKeeper's just around the corner. Are you entitled? Assess your eligibility. Look at your accounting records now and ensure that it's based on GST reporting method. Okay, it's so important that we get that right. And if you're in System Go, look at what new employees might be able to be entitled to JobKeeper. Ensure that you pay that JobKeeper rate. It's come down to $1,200 generally for a lot of people. So ensure that you at least pay $1,200 to your eligible employees. And also, just a little quick tip that you might find useful is that that's in play right now. So if you've had new employees that have come on since the 1st of July, they're actually entitled in your September. You can get those in your September application. So you can apply for your September around about the 1st, 2nd, 3rd of July, whenever you get back into the office. You can apply for that and include in that September new employees that have commenced work for you, ensuring that they've worked more than 20 hours in a given week, that they qualify. So that's a little bit of a tip that can significantly increase your JobKeeper entitlement that you may not have been aware.
So we've just got a couple more JobKeeper questions that we'll round off for the night. So from Beck again, I've read that sales of assets need to be included in G1 on BAS. So do sale of assets get counted in the GST turnover? Yeah,
I saw this publication from the ATO and they did make reference to if a sale of an asset such as a motor vehicle was sold, does that get put into G1 and is it counted for eligibility? And the reply from the ATO was yes. So as unfortunate as that may be for some businesses, if it falls into the turnover, it's actually being given in the ATO response that sale of capital assets will be involved in the turnover test. So yes, unfortunately, that is the case. So if it's happened, that's unfortunate, but if it's not happened yet, look at delaying that if it's going to be a kicker as to whether you remain in the system or not. So if it's one of those, we'll look to defer that sale.
Okay, so just one more from Gus. Basically on the 28th of May, 28th of the month, we'll stop paying JobKeeper if we don't meet the criteria anymore. As guests, all past payments up until then will still be reimbursed to the date by the ATO. So up until the 28th of November, so you'll lodge your September, which would be lodged next month in October, and you'll still receive your payment for that, for that 2-week period.
Yes, yeah, that's right. So again, we're getting back to the bookkeeping side of things, and for a lot of you, you may not get that updated in time, but you just got to assess that now, and now is a good time to see where you possibly might land, because yes, 30th of September, when we go and apply for our entitlements, how do we know whether we're actually 30% down? Well, you'll get a fair idea if you had a quick look right now. Go through your bank statements, look at your deposits, particularly those that are on cash basis. That's an easy one. Just go through your deposits on your bank statements, take out the GST element by dividing by 11, extracting out the GST. You'll get where you're currently look like landing, and you'll understand that at a much more accurate level. And that'll give you a little bit of room to go, well, am I entitlement or not, and then determine whether you need to assess your employee status on that basis.
And just a quick recap on what are the reporting requirements?
Yep, okay, so again, I just touched on getting your eligibility, and that will revolve around you getting your accounting records up to date, and that'll be 30th of September cutoff, so that's when we'll go. So you'll naturally apply for the September, which is the JobKeeper 1.0, which you're currently in right now. You'll get that last one in, so that's your last claim for up till the 28th of September, and then you're going to assess whether you keep going with your JobKeeper or not, because that time frame is going to be the 1st of November. Or 2nd or 3rd of November when you apply for the new 2.0 JobKeeper. So you won't know that until you pretty much know where you're going to land, to whether you're 30% reduced in your turnover, or if you're a charity, you're 15%. you'll know that. So it's a good idea then to get your accounts done now, because that's going to determine whether you continue by paying the $1,200, provided that you do qualify for the turnover test.
And if an employer doesn't qualify, they don't need to...
Don't need to do anything. You don't, yeah, if you don't need to contact the ATO whatsoever. You will simply just will not make the application yourself, like you will be for the last September month. In 1st of October, you'll make your last application, but after that, you just simply do not go onto the ATO site and then apply. You don't need to contact them and say, we're opting out. You just simply do not reapply on the 1st of November. All right, so, and the other issue that I was going to indicate, just to wrap up what we've talked about tonight, is the importance of getting your human resources up to date. So it's looking at employment contracts. So I said at the start there, we need employment contracts for every single staff member that you have employed. We have them here. Every staff member of ours has an employment agreement, and employment contracts, legally binding, in compliance with Fair Work. And it's a useful tool because employees know their entitlements and they're actually queued up as much as what we are as employers with their rights and responsibilities. And it just ensures that you're protecting your business, not purely tribunal areas, but areas of your business that protect you, help. Everything you build up for is retained by that business, and it shouldn't be eliminated or at risk just because you've employed a person and they've decided to leave. So it's so important that you get those up to date and they're compliant and they're in place for every single employee. It's so important for your business. And we can assist with all those. We have the ability to have those drafted for your particular type of business due to your circumstances as well. So please give us a call and we can arrange those arrangements for you and ensure that we make your business that better off and protect it. So Grant, that brings us to a complimentary discovery session. So we will be pleased if you get back to us and say, we'd like to give that complimentary discovery, and we're more than happy to provide that to you. We're allowed to come in free of charge, won't cost you anything. We won't throw things down your throat or anything like that. And it's purely just to make you better off, because that's what we're passionate about. Of course, we're here for profit sometimes, but a lot of the times...
We're here to help the clients, and that's our main goal. So we'll be able to see where your business is going, where you're at now, what's your potential of where you could be, and where your next steps are. So on HR perspective, do you need contracts? How can we assist, and where can you go to get them, and all that sort of stuff?
Yep, too right, Grant. Well done. And also, we'll be sending you some feedback forms in your inboxes. They may get there immediately, they may turn up later tonight or in fact tomorrow. So check those out and give us some feedback. In there'll be some health check assessments and all those sorts of things that we complimentary advise to you and can give back to you as a service. So thank you very much for your attendance. We hope that we've made a difference to you, enlighten you with a few little tips and tricks, and ensure that you have an understanding of both the JobKeeper and human resources issues in this torrid time, which we hope will be ending soon, and provides opportunity for you to just adjust your thinking and still keep creating. You are creators, you're in business. So you've got to create that landscape for yourself. So ensure that's protected and also is flourishing for you. So thank you very much for your time. Thanks, Grant.
Thank you, Jared.
Yeah, it was great fun for you. So please send in the questions, and if you'd like to contact us tomorrow, please do so.
Yeah.
So we're here to assist you. So thank you very much. Have a lovely evening. All right.